Okay, so if you're a renter, chances are you've heard of Lemonade, right? They're the company that promises to make insurance super simple, lightning fast, and, get this, even charitable. I mean, it sounds almost too good to be true. So does it actually hold up when things go wrong? That's what we're going to dig into in this explainer. And that really is the big question, isn't it? Insurance has this reputation for being, well, a total headache. It's complicated, it's slow, and sometimes it feels like they're working against you. Lemonade comes along and says they've fixed all of that with some fancy AI and a slick app. But can a tech-first model really be fair and simple when you actually need to file a claim?
So, in this little investigation, we are going to break it all down for you. We're going to look at what their policies actually cover. We are absolutely going to tackle that crucial question, do they pay out? And we're going to figure out the secret behind those super low prices.
All right, Section 1, a new kind of insurance. So, what makes Lemonade so different from the old school guys? Well, it really starts with the fact that they didn't just slap a nice website on top of a clunky old system. Nope, they built their entire company from the ground up. Totally different. So here's the deal with their model. Pretty much everything happens on their app. They've got this AI, her name's Maya, and she handles getting you a quote and can even pay out simple claims, sometimes in just a few seconds. It's wild. And then there's their giveback model, which is really unique. They take a flat fee, and at the end of the year, whatever's left over goes to a charity you pick. The whole idea is to change the game, you know? Since their profit is a flat fee, there's less of a financial reason for them to deny your claim just to make more money.
Okay, so that's the business model. But what are you actually buying when you get a policy? A standard Lemonade policy really boils down to three main pillars of protection.
First up, and this is the big one, is personal property coverage. This is really the heart and soul of any renter's insurance. It's the part that protects all your stuff, your laptop, your furniture, your clothes. If something terrible happens like a fire or a pipe bursts, or heaven forbid, someone breaks in, this is what helps you get back on your feet and replace everything.
Next up is personal liability. And listen, this one is so important and a lot of people just kind of gloss over it. Just think about it. What if a friend slips and falls in your apartment? This coverage is what protects you from the huge financial hit of lawsuits and medical bills if you're on the hook for an accident.
And that brings us to the third pillar, additional living expenses. Most people call it ALE. So let's say there's a fire or some crazy water damage and you literally can't live in your apartment anymore. You still need a place to sleep, right? This is the part of your policy that helps pay for a hotel, maybe some extra food costs, all that stuff while your place is being fixed. It is an absolute lifesaver.
Okay, so this table really lays it all out and shows you what this looks like in actual dollar amounts. And check this out. The liability protection can go all the way up to $1 million. And that is so crucial because legal fees, they can get astronomical fast. So the big takeaway here isn't just to pick the cheapest plan. You've got to choose limits that would actually cover you if the worst happened.
All right, Section 3. Can you trust Lemonade? The app is cool, the price is great, but none of that matters if you can't trust them, right? So now we get to the most important question of all. Can you actually count on Lemonade to be there for you when you need the most? Does Lemonade actually pay out claims? I mean, this is the million-dollar question for any insurance company, not just Lemonade. A cheap policy is completely worthless if they don't pay up when you need them to. So let's really look at how their claims process works.
So here's the breakdown. The promise is these instant AI payouts. And the reality? Well, for simple stuff, say your bike gets stolen, their AI, Maya, is actually famous for being incredibly fast. A lot of people say they got paid minutes. But, and this is a big but, for anything more complicated, like major water damage or a liability claim, it gets kicked over to a real human. And at that point, the process starts to look a lot more like a traditional insurance company. And yeah, it can definitely be slower.
Now, if you're a little skeptical about this whole tech-first thing, it's totally fair. But it's also important to look at the more traditional signs of a legitimate company. I mean, Lemonade is a publicly traded company on the New York Stock Exchange. They're licensed and regulated in all 50 states, and they have financial stability ratings from firms like Demotech. These are not the signs of some fly-by-night startup. This shows a company that has serious financial oversight.
All right, Section 4, the secret to low prices. So we've established they're a legit company that pays its claims, which leads to the next obvious question, how on earth are they so much cheaper than everyone else?
Well, it really comes down to three main things. First, they are 100% digital. That means no pricey office buildings, and more importantly, no agent commissions. That alone saves a ton of money. Second, they use that AI for a lot of the boring administrative stuff, which just cuts down on their overhead. And third,
that flat fee model we talked about, it completely changes the financial incentive structure.
Okay, Section 5, the AI scandal explained. Now, we can't do a proper deep dive without talking about a pretty big controversy that hit the company a while back. You see, using AI is their whole thing, but it also put them under a serious microscope. So here's what happened. A report came out with this really serious accusation. It claimed Lemonade's AI was using things like facial recognition or analyzing your voice in your video claim to decide if you were being truthful. As you can imagine, that raised some huge red flags about bias and ethics.
So this is the timeline of how it all went down. The allegations came out in 2022, and Lemonade came out right away with a really strong denial. But the claims were so serious that New York's main financial regulator, the NYDFS, launched a formal investigation. And here's the key part. After looking into everything, the investigation was officially closed. They found no evidence to back up those claims of discrimination.
Okay, Section 6, the final verdict for you. So after digging into their coverage, their claims, their prices, and even that big controversy, what does it all mean for you, the renter?
Well, it really boils down to what you're looking for. Look, if you're comfortable doing everything on your phone, you have pretty straightforward insurance needs, and you're looking for a good price, Lemonade could be an absolutely fantastic fit for you. But if you're the kind of person who wants a dedicated agent you can call by name, or if you think you might need some extra hand-holding through a really complicated claim, then you might feel more comfortable with a traditional insurance company.
And you know, this all really leads to a much bigger question. Lemonade is making a huge bet that speed, a low price, and a great digital experience are what people, especially younger people, want from their insurance company. So is this high-tech, low-touch approach the future of insurance? We don't know for sure yet, but one thing is clear. They are definitely forcing the entire industry to rethink how things have always been done.